Okay, here you compare your debit side of your cash book along with the receipts, which is your credit column of your bank statement. Along with the credit side of your cash book, you compare the payments, which is the debit column of your bank statement. As you can see, there is 1200 on the debit side of the cash book, as well as you see 1200 here. Again 2181, 2181. Now let's make a comparison between the credit side of the cash book and debit column of the bank statement. So you have 145 here, 145 here, 688, 688, 365 and 365. Now you're going to apply the rule which I have taught you in the previous lessons. You have to look into the factors that are in the cash book but not in the bank statement, and the factors that are not in the cash book but available in the bank statement. So this information would go to updated cash book, whereas over here this information would go to bank reconciliation statement. Now you can see there is one factor on the debit side of the cash book which should go to the bank reconciliation statement, and you deduct this as unrealized checks. Whereas you can see that there are two items here which goes to the bank reconciliation statement. Since it's on the credit side of the cash book, you add it in the bank reconciliation statement as unpresented checks. Now let's see if any information is left over in the bank statement. There isn't anything left over on the credit column of the bank statement, but you can see there is one element which is left over on the debit side of the bank statement. Therefore, this should go to the updated cash book onto the credit side. And what are you going to write there? As direct debit. Now I think you can complete the updated cash book and the bank reconciliation statement. Now let's see how to complete a bank reconciliation statement and an updated cash book. In order to complete an updated cash book, you take the closing balance of